We will now try to change, okay, to VIX 75. So by default, you have VIX 25. By default, it will be like this with R25, but you just have to change the 25 to 75. That is for volatility index 75, or volatility 75 index. So you basically have a chart like this. So as you have observed, the market has been going down because this is actually on an 1 hour time frame. We assume we see that on this area, the market has basically been a bit consolidating. But if you were trading in 15 minutes time frame, you would observe that in a 15 minutes time frame, the market had actually started coming down, just like how our master setup had predicted on the 15 minutes time frame. So what happens when we have this whole setup? So let us first remove this. Remove this, and then let's take our chart to the daily chart. We are taking it to the daily time frame because we actually want to be aware of what is actually happening with our trend here. So on a daily time frame, this is what we basically have. So it has basically been moving on a single direction. So the first thing you should do is you have to plot your support and the resistance line. So we take the nearest high and the nearest low point. So this region here is our nearest high, which is our resistance level, and we also take the lowest point, which is this one. So this area act as our support. If you want, you can actually even put it on this very same area here, because all these are in the same support thing. So we have got this highest support, this highest resistance, and we also have this highest support. So once you have this, you basically know the areas which we are trading from. And remember, the higher the time frame, the stronger the resistance and the support which you actually get. So the higher the time frame, the stronger the support and the stronger the resistance. So once you have mapped up to your resistance level and your support level, you would now change your time frame to 4 hours time frame. So we need to see what is happening on a 4 hour time frame. So from the 4 hour time frame, we are able to see as well that the trend here has actually been coming down. We basically have had a downtrend in the 4 hour time frame. So the trend has actually started coming down up to where it is at the moment. So from this area, we can also plot the nearest support and the resistance which is there. So in this case, we also change the color. Let's say we put the color to blue. So the nearest resistance we have, it's this region. So we choose this region because it has a lot of points which have actually been touched. We didn't choose this region or this because they have. So we have got a lot of areas which have been touched on this one. So we actually choose this as our next resistance. We also plot for the nearest support. The nearest support is now on this area here. So we have got a lot of support on this area here. So once we have this simply means that our trading for today will basically be in between these same areas. So our trading for today is basically between here and here, because this is the 4 hour time frame, meaning that each candle we have here is of 4 hour time frame. So once we have this, we basically know how we will be trading for today. So what happened? How do we make entries and the like? Remember, there are two ways you can make entries. One, you can wait for it to hit your resistance, then you make a sell, or you wait for it to hit your support, then you make a buy. But on a downtrend, we always sell. On an uptrend, we always buy. So because this is volatility index, and the volatility index is actually a bit more volatile than other indices and other trading currencies. So with this, we are going to change our time frame to a lower time frame, because making uh, trades or entering trades on a higher time frame like 4 hours, unless you have a very big equity. But if you enter trades in here, most of the time you might actually just deplete your account. So what we do now, we'll change our time frame to 1 hour. So we have changed our time frame to H1. So from H1, we are able to see that we have actually started a bit of an uptrend going up there, but it's not a smooth uptrend. It simply shows as if the trend is still on the same level. So basically, on an hour time frame, this trend is still reconciling here, but you still have got some ups and downs which are here. So what do we do here? How do we make entries from here? So our master setup will basically help you make your entries from there. But what we do from this area, we only know that this blue line and this blue line are the strongest resistance or support which are there. So what we need to do is, now we need to plot a trend line. We need to plot a trend line. So from what we are seeing from this chart, there is a bit of reconciliation happening on this level here. So there's a bit of reconciliation happening on this level, meaning that making setting up or putting up trades on this one will be a bit difficult on our part, because the market is just on a straight line. So what do we do? There are two ways we can do. We can plot a trend line now on a higher time frame than this one, or on a lower time frame than this one. So we need to choose which time frame we can use to plot a trend line in this case. So our trend line which we are going to plot now, we will just simply change our time frame back to 4 hours. From 4 hours, we're able to plot a trend line. Remember, trend lines actually come from a higher time frame, the highest point to the lowest point if it's a downtrend, and the lowest point to the highest point if it's an uptrend. So we come to our trend line here, we choose our trend, and then we come to the highest point, which is here, and then we actually draw our trend line from there. Okay, we just try to zoom in a bit. So we have this area here. So we'll draw our trend line from there, like here, like that. This will be our trend line, which we have basically drawn. So a lot of people have got issues on how the trend line is drawn. So our trend line is drawn basically from the top part to the lowest part. The idea here is to make our trend line touch as many weeks as possible. So a lot of people will argue whether you have to put it at the part top, or at the body, at your body of the candlestick. it basically doesn't matter that much. What we basically need here is these wicks to actually touch 2 points on the first drone. So what happened is this now. We have got areas where the trend line has actually touched. So we have where it actually started from going down from here, and it actually touched here on this our very same resistance. So this became our first entry point number one, where our entry was supposed to be taken. Then we have point number two, where our entry was supposed to be taken. Point number three, where our entry was supposed to be taken. And then we also had the point number four, which was not that much good of a position to enter, because at this point it had actually reached our support line, which is here. So what do we do, or what does this actually show us as traders here? So what this simply shows us, it simply means that we have had a downtrend coming down, and now it has reached this level here where the trend is out now trying to change, going up. Remember that if it's a downtrend, it will make these waves. When it's coming down, it will make highs and lows, highs and lows, like that. So it will make a wave like this. So meaning that the first top point will be lower than the second top point, which will be lower than the third top point, which will be lower than the fourth top point, which will be lower than the fifth top point. But on the lows, what you need to understand is that the lows as well have to be higher than the other one. So we have our first low here, which was a bit higher than our second low here, which was also lower or than our third low here. But on the fourth low here, it is actually almost on the same level as our third low, but slightly a bit up there. So our fourth row actually showed that the trend is actually changing. So when you have a trend line coming down and our lows are also coming down, once you start noticing that the low has actually changed, it is actually above the previous low, that simply tells you that the trend is now changing. So the downtrend we have is now changing to an uptrend. So what does that mean for us? This simply means that the trend which was there has now gone, and this area now has actually given us what is referred to as a breakout. So from the downtrend which we had here, we now have a breakout which has actually happened here. So how does a breakout occur? So the best issue, or the nearest thing to observe a breakout, is that when it actually crosses our trend line, it will actually go up and then it will come down. When it comes down, it will basically go up again. So this is how you would actually notice a breakout. So meaning that this region here now, which is here, is now a region for a breakout. Meaning that the trend on this guy which we had, which was a downtrend, has now changed. It wants to go into an uptrend. There was a confirmation which was here. It touched our trend line, started going up, meaning that that was now a breakout from the downtrend to an uptrend. So what does this mean? This simply means that this trade now will be going up than how it was actually going here. So what are we expecting here? The thing now which we're expecting is that we have now developed a region which is now called a confluence region. So we have got a confluence region here. Now, what this simply means is that a lot of traders now, a lot of day traders are now eyeing this position here. Meaning that they would actually wait for this trade to actually come down. When it reaches here, then it actually has to spike to go up there. So what are they waiting for? They're just now waiting for this trade to actually come here and then go back, because this is now an uptrend. It have actually to retest this option here. So every time your trend line actually meets with a support or resistance, it usually makes what is referred to as a confluence zone. And confluence zone are actually very good zone to actually buy your trade there. So meaning that this area is going to be eyed by a lot of people, whether we like it or not. There is a higher chances that a buy on this area will actually be more profitable in the long land. So this is how we would actually plot what will be happening on our chart. So as you have observed, we have actually have a downtrend coming here, because this has actually been done in a higher time frame. So our downtrend has actually ended there, and we have actually seen a breakout which is coming here. We had a spiking up, coming down, then touched our trend line, and then started coming up, but it's still showing signs that it's actually coming down. So what we're expecting it, we are just expecting it to come down a bit, and then it will basically shoot all the way up. So what will basically happen is that once it touches here, we'll actually have our trend line drawn, because we can actually have a trend line drawn like this. We basically have a trend line drawn like that. So meaning that we have got where these guys touched, and where these guys touched as well. So we have got the first point and the second point. We also have the third point where it basically touched, meaning that when this guy starts coming, there is a point which would be created if it actually touches this point. This might be the best point for a buy, since the trend is now changing. If it misses this point here becomes the strongest point for a buy, meaning that we now have two entry points which will be created. We have got one, and then we also got our second point which has been used. So we have got one and two possible entry points which have been created. So you can basically mark these areas as your entry point. So entry point number one would be on this very same level here, area 40 405 661.5536. So this actually becomes your first entry point, and then this region here becomes your second point there. So on this very same live trade or live market, we are expecting this candle to come down here, touch this candle of ours, and then if it misses here, we are expecting it to touch this candle of ours. These are our highest trading points, which were actually which is actually more of our strongest points. Francis, talk to me.
Yes, I- I've seen when it touches. I just want to be clear. When it touches
Hello?
point one, do you immediately enter a buy? Or hello, 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 hello? Are you able to get me?
Sorry, I can't actually get what you're saying.
Are you getting me
Hello?
now? Hello.
Yes, on my side I can get
Can
you.
you hear me now?
Hello?
Okay. What about you, Jared? Are you able to get me?
Okay, so
Hello.
maybe if you have a question, you could just basically type
Oh,
a message. I think it would be okay for me to respond like that, because I think my audio, I don't know what's wrong. Whenever I choose Zoom, I actually don't get what the other people are actually saying. So these are the areas we are basically waiting on. So area number one, area number two, where the entries would basically come in. So once you have plotted these guys, you can now change your what you can now change your time frame to the time frame where you would actually want to see your trade. So trading time frames, you can actually go to the 15 minutes time frame so that you see where you're actually expecting your trades to basically happen. So we are expecting it to continue coming down. This market, we are actually expecting it to continue coming down. So once it reaches here, we'll basically have a trade which we're actually expecting it to touch. So this guy is still coming down from there, and then we also had our what has happened to our trend line which we had actually plotted here. So there is also a possibility of that other trend line which we actually had. So we'll have these guys happening. So we already have got the first point it has touched, the second point it has touched. So meaning that we now are expecting it to actually come and touch our first point here and our second point, which is here where our trend line actually touches our resistance line. So this is what we are actually expecting to happen in this very same market. So for our market today, we are basically expecting it to react in that same manner. So it will continue coming down like that, and then it will continue reacting like that. So we expect those. But remember, this is a volatility index. So what usually happens is that what we basically mark on a higher time frame is these are actually expected to be higher trades which we need to trade. We don't need to be trading anyhow because there is a spike coming down or the like, but we need to enter trades which will be more profitable to us when we enter, and which actually have got less chances of going the wrong direction. So the ones we have actually plotted where this guy will meet on this position and where to meet on this position are likely to be our highest position, because once it touches this trend line we have drawn, it's actually going to go a bit more higher, or if it reaches this position, it's actually going to be a bit much higher. Meaning that on those two lines, both on those two lines, once it touches them and then we make a buy, we are expecting to make a high and long trades to go than how it would happen if we start scalping to my smaller ones which are actually happening here. So this is what will be happening today. So we'll just be watching the market and see what will be happening. You could be doing this on a daily base, whereby you start analyzing your charts and then see what actually happens. So every time you basically want to start trading, you have to make sure that you okay. Let me see. I've got some questions here from Francis. he says, do you enter at point one or you wait for it to see if it will reach point two first? Okay, yeah, it depends on it. Now, this is where you have to actually use what is referred to as price action and choose how the candlestick patterns are now forming. What will basically happen is you have 2 points where you are actually going to see your trade. So it depends on the price action and the candlestick formation, which is there. So there are several types of candlestick formation. So what usually happens is that it will first, it will basically just touch the point. The way we have actually observed it touching these other points here, it will it will basically just touch the point and then start going back. That's when you actually do that. If it did not do that, if it actually comes as a strong candle, the way these other candles are coming, then you actually okay, sorry, I had a bit of network. I had a bit of network issues there. Okay, welcome back. Sorry, had a bit of my network had just cut there. So, like what we were saying here, what you're going to expect, you're going to have a scenario like what is happening uh, on this level, on this point here. So, what will happen is that you basically have a red candle coming down here. The red candle will start coming down. Once the red candle ends, if a green candle forms here, that's when you actually make your buy. Remember that when it's coming like this, you have a red candle coming down. The red candle will be coming down like this. When it reaches here, you wait for it to actually finish. You wait for the candle to actually finish. So if what is coming back changes to be a green candle or whatever color your candle is, if what is coming here starts to develop and then it develops a green candle, it will be like this. If it develops a green candle, yes, it will be a green candle, and then this one here will be a red candle. So you have a red candle coming down, and then this one here will change, and then it will actually start being a green candle. So once you start having these greener candles there coming building up, that's when you actually make your trade. But if it reaches this point and then the second candle which actually comes there is also a red candle, it simply means that it's actually going to cross this area. You only make this trade if when this candle finishes, what actually starts is a greener candle. So when you have a green candle going up, then you can actually make your trade. Remember, you don't just run just because this is the area, then you just so long as it reaches here, you make a trade. No, you actually have to wait and see the candle formation which will actually happen here. So the same would even happen on this other part here. So when we actually reach on this other part here, if it comes as red candles, when it reaches here, you wait for the candle to end. No wonder we buy in 15 minutes time frame, because when it reaches in 15 minutes time frame, we just have to wait a bit more minutes, just 15 minutes waiting. Then when it actually, when the candle finishes, when the candle ends, we wait and see what new candle will actually form. So if the next candle which actually forms, it's now a green candle, then it will mean this guy will now start going on the way up. So you wait and see what the other candle will actually form on those very same line. You just don't end just because it reaches here. It can reach here and then it can also continue going down. But what you have to is you have to wait now and see the price action here. Where are the candles going? So you wait for the candles which are there and see what is basically going to happen on those very same line. So basically, this is what would happen when you are to enter your trade itself. So basically, this is what we are expecting on our time frame or on our chart for today. Okay, there is also another question saying, what if the candle starts as a green candle and then it continues going down as a red candle? Okay, yeah, situations like that usually happen a lot. Most of the time, they would actually happen like that a lot. So what happens here is that this is why you basically have to set your stop loss. This is why you basically have to set your stop loss. So if this region here is what we're expecting to make your call, so you can actually just mark maybe this point here to being your stop loss point. So this level here might be your stop loss depending on your risk reward ratio, depending on how you actually calculate your risk or reward ratio. You would basically put a stop loss here in case where it actually goes down. So depending on how you want to put your how your trading risk is, you can put your stop loss there, or you can actually take it a bit down there. Because remember, this trend line we have here doesn't basically mean that this line is the actual area or the actual point. There is a point which happens. It basically becomes a region, meaning that it will basically become a region like that. So this whole region is what is our trend region is that. So meaning that it can come on this same point and go back, or it can actually just come back a bit here down, and then that's when it can actually go back. That's why when you put your stop loss, you actually don't put it immediate there, you put it after where you feel would be the last point of resistance. So you can also take in mind uh, the previous resistances which were there. So you also take in mind the previous resistance which were there. So the way it is here, it has resistance which is here. So this very same line where I've drawn our stop loss level has actually acted as a resistance, a support area on the previous market, because we are able to tell that on this level here the market was consolidating, and it was actually meeting on this very same level here as our support level. So meaning that we are actually expecting it might come down here, meaning that the level now of this trend line would actually go a bit down up to there. You see, like that, because there was some support which have been respected on several occasions on this level. So we'll put our stop loss just below this level, because we are expecting we might have a bit of resistance on there. So we might put our support, our stop loss somewhere there and see what basically happens. So the trade can come down, can continue coming down, and then after it reaches this support and resistance level, then it might decide to go all the way up there. So like this, we will have a very powerful and a very strong trade to actually happen today. So we will be expecting it. Doesn't matter of where it's going. It's normal. It will be going up, but we're expecting it to come all the way down here. So depending with the market condition, we are also allowed to restructure our trade. We are also allowed to restructure our. So like we have observed here, our first trend lines were actually made from here to here. But from what we are now seeing on how the market is now reacting, we are now seeing a different change. And because of this resistance which was here, which has now created a bit of resistance on top there. You see, where we had some resistance here it has now changed into support, meaning that we can now even change the way our trend line is from down below here. So if we need to look for more or new trading points, depending on the change of the market direction or the market condition, we are now able to plot a new trend line according to how the situation for the market is. So we are able to see that the conditions for this market had actually changed from where we had plotted our line here to there. So if that is the case, we can actually then draw our next trend line to basically touch 2 points. So we have trend line coming from there going up there. So at first we had this curve going down like that. Now we basically have new formation which has actually occurred because of the respected line which is here now. So this line has been respected a lot. So this, which was now our resistant line on these guys here, has now turned into support for these guys here. And this simply means now that this support which is here now is ideal to develop a new trend line on the shorter time frame like that. So if you want to put new or more entries on this trade now, you can actually draw this trend line. So we basically have this trend line which we're expecting, if it goes there, to start coming reach here to go up, or alternatively we have far new trend line which has actually been erected here. So we have the first point which has touched, which is here. So we are likely expecting it to actually continue going up like that. So what will be expected now of this market is that the way it has started, came up like that. So we're expecting it to go up and then it will come back and touch our trend line, and then it will continue doing stuff like that, like what it normally does, like that. So if the market condition will continue the way they have started here, we are going to have a wave like this. So this wave can be expected if it actually breaks out of this line. We're actually expecting it to now touch this support level, which is here, to go up, or it will come to touch this trend line here to go up. Remember, whenever you have a high an uptrend, what you are expected to do in an uptrend is actually buy than sell. In an uptrend, basically try to buy. In a downtrend, sell. That's what basically happens. So if the trend is coming down, sell. If the trend is going up, buy. selling against a trend becomes a bit more riskier than anything. So we don't need to risk a lot of money, but we basically need to make sure that our trades are actually being okay. So I hope we have actually gotten something over this uh, lesson here. Okay, so there's a question which is coming here saying, having changed the market condition, doesn't that make you miss entry points? Because like the previous one, that is just from you touching the 15 minutes new line, we actually missed a buy. Okay, yeah, this basically happened. You remember the market, we normally don't know where the market conditions or directions are actually going to be. So basically, what would happen is the conditions will always continue changing, they won't remain the same. The conditions will continue changing as the market goes. That's why we actually make different we actually reconfigure our chart. We had configured it in this direction whereby it's actually going up like that, where we're expecting it to be like that. But with the change in market conditions, it has actually reached a support level where it's actually going up. So that basically gives us a change. We have to continue to fine tune our charts. Like that, we won't be able to lose out a lot. Of course, we will not be able to get all the entries which are there, but our ideal position is to at least try to get all the good ones which have actually been instructed by us. So you would notice that this one, this won't be considered as a missed entry because we have just plotted this trend line here. So since we plotted this trend line here, what we're expecting is the next time for it to reach this trend line and then it will go up. So we'll basically make an entry when it actually touches the trend line there. So it has already started coming down. So when it reaches the trend line here, we're basically going to make an entry on an up trend. Remember, this trend line has actually been drawn in 15 minutes time frame. So 15 minutes time frame, it basically means that here it's now touch and go, meaning that the trades which we'll be making here on these trends are actually going to be short trend. This is now just scalping. So we'll just scalp whatever it is which will be there. We'll just be scalping it as we go along, scalping it as we go along. So we'll just wait for it to be like that. Another thing to remember for today with these markets, remember today it's the first Friday of the month, so there is a high likely chance of the market being not stable. So when we are trading these issues, we have to make sure that we actually watch the market carefully because of the same NPF. The market actually might be a bit disturbed. So have take caution when opening your trades during today's for the whole of today, because whatever will happen on NPF is likely, it might likely confuse our entries and the like. But we hope it actually holds up and act the same. So for today, I think for this time we can actually stop here. If I have time again, I'll schedule for another session whereby we'll discuss one of the new ways I've discovered on how we can actually trade crash and boom. Not a new way, of course, just an add up, a top up to the already existing feature we have for crash and boom. Now, how to actually trade on both direction, both catching spikes and also catching the other shorter candles. So depending on what time I'll make, I'll actually announce in the group when we can actually do that. For this time, I think we can stop here. I'll hope to see you again. You can actually text me privately for any other questions you have or clarifications which you need over this lesson we have just had. Thank you for today and have a productive day.
Thank you very much.